We're going to jump into the gold market right now. As I said in the beginning of the show, gold moved down pretty sharply this week on a couple of times. I'm going to start out by moving a chart into here, which is the weekly chart. Now, we show weekly charts. We do our analysis for weekly, actually monthly, weekly, daily, and intraday charts, 2-hour charts that we show also, which have a lot of great information on it. I'm going to show you some of that right now also. So here is that chart for the gold market. We're looking here at about a year and a half as we go all the way back, we're looking at 2 years, over 2 years, as we go all the way back to 2018 there. If you want to learn about our cycle analysis, go to askSlim.com and click on the cycle analysis workshop on the top tab, and there's a lot of information there about cycle analysis and that workshop. So this is the gold market. If you look here, you can see our cycle analysis. These are called cycle brackets on the bottom. They tell us an average distance. It's a drawing tool, and that's a guide for us for the cyclical rhythms. You can see this big cycle right in here. It started here at that low and bottomed here. And this is what's called nesting, where all three of these cycles come down at once, and that brings you the largest declines. Each of these big ones are made up of two smaller ones, right here and right in here, a half cycle, and then there's a quarter cycle in there, a smaller one also. You can see each of these half cycles, we have the percentage gains for each one marked off. 13%, 24%, this one made a 23% gain, this one made a 24% gain, and then they all bottomed right here in this area of nesting again. That had us bullish and looking for the market to go up significantly. That actually has not changed yet, but we are in a period right now where you have to say to yourself, is there a, we ask the question when we get a breakdown on the shorter term patterns, how much damage is going to be done in here, and can it survive moving down the way it has? You can see right up over here, 1965, actually on the daily it shows I think 1972, is the spot where the market had big resistance. And we said that's the area it needed to get through in order to move up to that new high or over 2100. And this is that big cycle projection that you can see right up over here into that fib extension zone. The minor cycle right over here that you can see is the one that topped right here and now is coming down, and it broke this important daily low at 1863. That's that line right over there. Now that breakdown is negative for the short term, and it could mean that all of this time period right over here in towards the middle to the end of February could be a time when gold struggles. This dashed line you see over here is silver. I'm not going to show the silver charts right now. We show that in Future Speak on Wednesdays, and if you will watch that show, you need to be a level 2, 3, or 4 member. Then you'll be able to see our silver analysis and a total of 24 different indexes and futures contracts. So this important level right over here, 1840, is the 61.8% fib support level. Right over here at 1800, approximately 18.1805, is the 78.6%. This level getting broken here would be bad. It would be very worrisome for the big picture. As long as it's hanging out in this area, the big picture is really okay. We think it's okay, and it will probably be dancing around and chopping in this area, eventually come down here and test under these levels, and then begin moving up again. So this is somewhere mid-February, and now looking out over here into March and maybe April, and then some more correction right over here, and then these move up again, and then over here in May, June would be time for the upward surge. Again, if we get under here, it will be worrisome. If you get under this level right over here, that last low, which was right around the 1765 area, it's over. This whole scenario for new highs would be dead. So that's why it's important in this area. We are going to look for some chop in here and even getting its footing after a little bit of time and trying to rally up in here again and then chopping down. Hopefully it will hold, it'll consolidate in this area, and then be able to have this move up here into this March period, maybe April. So very important time here. We're going to call it a short-term breakdown and a little bit worrisome, but on the longer term, okay. Now, just for a little better picture of the short term, so you get an idea, I'm not going to show the daily chart, too much of our proprietary information in there. I want you to sign up to be able to see that. But I'm going to show you a little bit here on a little different chart where we're looking at the gold market on a 2-hour chart. Now, we do a lot of analysis on a 2-hour chart, and in this case, what I have put in here is the slim ribbon PO, a slim ribbon and slim ribbon PO. This is a slim ribbon right over here. The slim ribbon PO is a signal indicator for the slim ribbon. This, you can see when the slim ribbon is moving up and it's positive, then you have a condition where it's likely you're going to get an upward move. The slim ribbon PO, it turns green over here, and green is positive. These are just simply signal indicators which are confirming the positive condition and telling you you'd want to stay long, and telling you, well, if you're not long, you might consider that as an indication that you can you can put on a long position, or you can maybe add to a long position. You could see how well that would have worked right over here. This is not really buy-sell signals at all. It's condition signals for momentum. And you can see in here how well that worked. Look at this, as you had the big upside gap here at the beginning of the year, and then the downside gap here on Wednesday. It left this island over here, which is not good when you see something like that. And then, and by the way, it's better for these purposes to not have a 24-hour chart up, because then you get the clearer patterns. So what happened here, as you can see right here, is the slim ribbon turned negative for the very short term. You can see that signal right over there, as this is now turned negative, and it's telling you that rebounds are likely to fail. So the very short-term conditions, or near-term conditions, for the gold market, and this is GLD, we're using the ETF here for this example, is telling you that rebounds are not likely to hold, and the short-term condition of the gold market is worrisome, and at this point, negative. Even though I'm still positive on the long term, intermediate term all still looks okay. The shorter term now is giving signals of some problems. So this is always the first domino to fall when that happens, and hopefully the rest of them won't, because the longer term momentum patterns are still positive. And when I go back to this chart right over here, which is the weekly chart, you can see our momentum indicator, which was coming down right over here on the weekly chart, had turned up, and you can see that right there, and it's still pointing upward. It may not hold it for long if the downward pressure stays in here. So I wanted to show you that about gold, looking at the slim ribbon PO, which I think is an excellent indicator, giving you warnings for the near term that the gold market has some problems. Now, the silver market has not given that signal yet, and the silver market is stronger than gold, and we expect the silver-gold ratio to continue to improve as far as that goes. So that's a look at the gold market, and hopefully that was great information for you as you see the style of analysis that we do.